Welcome back everyone. I hope you're having a great day. In this video, we're going to take a look at the top 3 largest stock positions in Warren Buffett's public equity portfolio. Warren Buffett is considered one of the greatest investors of all time, and his company Berkshire Hathaway has grossly outperformed the overall market over the past 50 years. He's earned the title as the Oracle of Omaha, one of the greatest investors to ever live, and in this video, we're going to take a look at the top 3 holdings in his public equity portfolio. Berkshire Hathaway is one of the largest companies in the world with a current market cap at over $600 billion, making it the 7th largest holding within the S&P 500. And Berkshire Hathaway right now makes up around 1.61% of the entire index. And why Buffett is considered one of the all-time greats is because of his long track record of outperformance. Taking a look at a chart that shows Berkshire Hathaway's performance relative to the S&P 500 with dividends reinvested, starting in 1965, we can see year after year Buffett outperformed the overall market. Back in the 60s, 70s, and 80s, we can see Buffett absolutely crush the market year after year, showing some massive gains. In a few major years, Buffett was able to grow his company by 129% relative to the market's 23%. And if we fast forward to today, Buffett has shown some remarkable returns over the past 50 years, growing at an annual compound growth rate of 20.1% compared to the S&P 500's 10.5%. And if we take a look at the total return over that same time span, Berkshire Hathaway has grown by over 3.6 million percent since 1964, and the S&P 500 has grown by over 30,000%. So we can see Buffett has done an incredible job of continuously beating the market year in and year out, and on average over the past 50 years. And although Buffett is getting older, many investors believe he's getting washed out, he can't keep up with the times, he's not invested in tech. But if you take a look since 2012, so going back in the last 10 calendar years, Buffett has actually outperformed the market in 7 of the past 10 years. Many investors don't understand that, but Berkshire Hathaway is still performing very strong. They still have the ability to beat the market, they're highly diversified across many different sectors, and I don't think this company is going to slow down or stop growing anytime soon. So in this video, we're going to take a look at the top 3 companies within Berkshire Hathaway's public equity portfolio that currently has a value of over $300 billion. So right away, Berkshire Hathaway as a whole, the entire company, has a market cap just over $600 billion. So half of their market cap is made up of this public equity portfolio where they're invested in public stocks we can buy on the market as well. Before we take a look at the top 3 largest holdings though, I am going to ask you to please hit that like button and subscribe. I'm the Gen Z Investor, and on this channel we talk about the stock market, go over any major stock market news, and of course we talk about anything dividend or invested related, and of course we also track the progress of my own personal portfolio that currently sits at value at $150,000. So if you already haven't done so, please hit that like button and subscribe. And now on to the top 3 largest positions within Berkshire Hathaway's public equity portfolio. So we can see these are the remaining companies he owns, and I've blocked out the top 3. If we take a look at the 3rd largest position, that is ticker KO or Coca-Cola. This is one of the most recognizable brands in the world and one of Buffett's most published holdings. He loves this company, he's an avid investor in the brand, and this is a company he says he will never sell no matter what. Berkshire Hathaway currently owns 400 million shares of the company, which has an estimated market value of over $25 billion. And if we take a look at the chart for Coca-Cola, they currently trade for just under $55 per share. This is a brand I'm sure everyone watching the video knows and understands, and the company has a current market cap of $240 billion. They pay a yield at 3.15% and are currently trading with a payout ratio of just over 22. And if we take a look at a brief background for the company, they've been operational for 136 years, so they have a long history of selling drinks all around the world, and currently you can find Coca-Cola products in over 200 countries, and they're sold under 200 different brand names. So although Coca-Cola is the flagship name, they have 200 different brands that they sell products under all around the world. They generated over $38 billion of operating revenues in the past year, and overall this is the largest and most recognizable drink brand company in the world. And we can see although they are large and well established, they're still doing a good job of growing units. In billions, this is the amount of units grown and sold year in and year out, and we see reaching all-time highs at year-end fiscal 2021. So although this company may not see the fastest growth, they're selling more and more units every single year, which is exactly what you want to see. And some of their largest brands, of course, include the trademark Coca-Cola, Sprite, Fanta, Freshka, all the different water and hydration brands they've got into over the past few years as well, including they have some juices and some more dairy products and nutrition-based products. And they're even getting into some new styles of beverages like the energy drink sector, which has seen some massive growth over the past few years. So this company has done a great job of staying relevant. They sell products in multiple different brands all around the world, and this is one of the companies Buffett loves. He first bought the stock back in 1988, and he invested $1 billion after the market crash of 1987. And if we take a look today, this position has paid off very well. His 400 million shares of Coca-Cola currently, after the recent decline in share price, is worth just under $22 billion. His total book cost for the position is at $1.3 billion. So he's currently up in unrealized gains of $20.6 billion, representing a gain percentage of just under 1,600. And every single year from Coca-Cola, owning these 400 million shares, it pays him $700 million in annual dividend income. So over the past 2 years, in his dividend income alone, he's recovered his entire book cost. And like we saw, he made his first purchase in this company back in 1988, so Buffett has collected way more than his initial investment in dividends over the past 30 years. So Coca-Cola currently sits as the third largest holding in Buffett's public stock portfolio, and now if we continue on into stock number 2, we have ticker BAC, or Bank of America. Buffett currently owns over 1 billion shares of this company with an estimated value greater than $31 billion. And if we take a look at the stock chart, Bank of America currently trades for just under $32 per share, and this is the second largest US bank in terms of total assets, just behind JP Morgan Chase. The company has a current market cap at $254 billion, trading with a forward PE at 9.4 and a current yield at 2.78%. And this is a company Buffett's been buying recently. Exactly 1 year ago, back when the market crashed at the end of 2021, Buffett piled into Bank of America, investing over $2.1 billion in a matter of 12 days. So Buffett over the past year has really bumped up his position in this company, and it sits as the second largest holding within his portfolio. In taking a look at Bank of America's income statement, the company has done a great job of recovering since the pandemic crisis back in 2020. Taking a look at total revenue, pre-pandemic it hit around $85 billion. Then of course, during the pandemic year, it did a slight drop to around $74.2 billion, but then following that in 2021, they saw incredible growth to an all-time high at $93.7 billion in total revenue. So the company did a great job of recovering since the pandemic crisis and is performing very well over the past few quarters. And over the latest quarter as well, as interest rates began to rise, they saw a 22% year-over-year growth in their net interest income, which is fantastic to see for this bank. And of course, with all the liquidity crisis that we saw during the pandemic, this bank was not hit very hard, their loan losses were not very large, and their balance sheet has improved over the past 2 years as well. And if we take a look right now, Buffett owns over 1.01 billion shares of Bank of America with a current market value at $32 billion. He spent $14 billion to acquire this position, meaning he has an unrealized gain in the company of over $17 billion, or he's up over 118%. And every single year, Bank of America pays him $888 million for owning their 1 billion shares. So Buffett collects a massive amount of passive income from his ownership stake in Bank of America. So that was the second largest company in his portfolio, and if we take a look at stock number 1, by no surprise, this is Apple, by far the largest holding of them all, making up 41% of his entire public equity portfolio. So Buffett is of course very top heavy into Apple. He believes this is the best company in the world, and he currently owns 894 million shares with an estimated market value of over $122 billion. So Apple overall is the largest company in the world in terms of market cap, currently sitting at $2.3 trillion, and they trade for $138 per share. So of course, again, one of the most recognizable brands in the world. We all know Apple. I'm sure many of us are watching this video right now on an Apple device, and this company currently sits with a forward PE ratio just slightly higher than the overall market at 22.65 and a current minimal dividend yield at 0.64%. But overall, Apple's an absolute beast. Taking a look at the income statement, the company still does a great job of expanding total revenue year after year to over $387 billion of total sales in the trailing 12 months. That's an absolutely remarkable amount of money. $387 billion of total revenue generated in the past 12 months is absolutely insane. And if we take a look at their net income number, they've generated just under $100 billion of profits over the past year as well. There's not many companies in this world that trade with a market cap greater than $100 billion, let alone Apple generating that in one single year. And going forward, I don't think the company is going to slow down. I think their profitability is only going to improve because their sector with the best margins, their service sector, has seen an incredible expansion over the past few years. Apple service revenue climbed 17% in the latest quarter to a record $19.8 billion in a matter of 3 months. Overall, this service sector, I believe, is going to be the best factor of growth for Apple over the next 5 to 10 years. Services and subscription revenue is the best way to generate revenue over the long term, and Apple now has 825 million paying subscribers as of March 2022. So overall, this company is an absolute beast. They're growing in the right way. They're expanding the sector with the most high margins. And overall, I think Apple's a sticky brand. I don't see them going away anytime soon. And if we take a look at that service sector revenue, quarter after quarter continues to expand, reaching that high of over 19 billion. And if we take a look at the dividend, that is a minimal part of Apple right now. The last dividend is 23 cents. That's per quarter. The annual dividend is at 92 cents with a current yield at only 0.64%, but they also have a very minimal payout ratio at only 14%. And their 5-year dividend growth rate sits at 8.45% overall, and they've been growing that dividend for 8 consecutive years. But with Apple, the dividend is not only what you're looking for. You're going to get long-term share price appreciation. We can see over the past 5 years, even with the recent market turmoil, the share price is up more than 244%, and Apple's known for doing a ton of share buybacks. They buy back tens of billions of dollars worth of stock every single quarter, and we can see they've absolutely demolished their share count. And as the company continues to buy back their shares from the market, the shares you own in your portfolio become more valuable, and the company has more room because they're paying out to less shares. They have more room to grow the dividend, and overall it increases each shareholder value as the company buys back their own stock. So we can see at $26.5 billion worth of shares only a few years ago, all the way down to only $16 billion as of the latest quarter. So they've bought back more than 10 billion shares of their own company over the most recent decade. And if we take a look at the overall performance in Buffett's portfolio, Apple, he purchased over 892 million shares. It has a current market value at 123 billion, and his book cost, he bought it only a few years ago, was $31 billion, meaning he has an unrealized gain in the company of over 92 billion, and his annual dividend income from this company is $821 million. So overall, Buffett collects over $2.4 billion from the 3 stocks we've taken a look at today, and he's currently sitting with an unrealized gain on these 3 positions alone of $130 billion. So Buffett has done incredible in these 3 holdings. The performance has been remarkable. We can see the overall percentage gains, but of course sitting with $130 billion in unrealized profits is already insane, and collecting $2.4 billion of passive income by owning 3 of the most recognizable brands within North America is also a great feat as well. So Buffett has built a great portfolio overall, worth around $300 billion at this current point in time. His 3 largest positions are CocaCola, Bank of America, and Apple, and those are the 3 brands we took a look at in this video. So now I want to wrap it up by saying thank you for watching all the way to the end. I really appreciate it. If you have any questions for me, leave them in the comments down below. Thank you for watching. I'll see you in the next video.